Hi, I'm Rich Steinberg, President of Steinberg Global Asset Management, and with me today is Jacques Elmaleh, our Director of Research and also the portfolio manager of both our dividend strategy and our GARP strategy. We thought today would be a good idea at the end of the quarter to kind of review what's been going on in the markets, what's been going on in the world. So this quarter, the Fed was the big story, Jacques. So talk to us about what kind of happened this quarter.
Well, after the fixed income markets were at almost historic low yields, the Fed started to communicate with the markets that they were going to slow down or taper their purchases of securities, and that caused a little bit of a scare for fixed income investors, and so the yields on the 10-year Treasury went from below 1.5% up to above 2.5%, which is a big move in a short period of time.
But more than a scare, right? Because as the longer duration securities really got hit, the 10-year Treasury is now down 5.5% for the first half of the year. The aggregate bond index is down 2.5%. And prior to this year, fixed income investors have had the wind at their back. So how has this change in interest rate, has it changed the philosophy within the firm, within any of the portfolios?
Well, in our fixed income strategies, reduced our duration, took a little bit less risk, and the price was to lower our yield a little bit, but it was playing defense because the risks started to be elevated. In our dividend strategy, we had raised a little bit of cash, and we've moved a little bit to more cyclical areas of dividend-paying stock.
Domestic indexes have done better than international. The growth indexes have done well. The actually small cap has done the best versus mid cap and large cap. Internationally, international markets are up slightly, not even close to the U.S. markets, and emerging markets are actually down over 10% year to date by the emerging market index from Morgan Stanley. So tell me, what other issues and changes should we be looking for as the economy changes, and what the outlook of the economy is and how it will affect the portfolios going forward?
Well, right now we see that the economy improving in the United States. More slow and steady is a good way to describe it. Unemployment claims are falling. The GDP is growing.
How about housing?
Housing is a big pillar of growth for the economy. That is improving.
Market valuation is pretty good, so I think what we really need to do is kind of stay the course. Even when you have international exposure, it still acts as a diversifier. We have multiple approaches. The portfolios that the investors use are tied to their risk horizon. So, as we finish up this brief update, we want people to realize they really need to take that litmus test and make sure that the way that we're managing the money is how they feel about risk. And we'll talk to them next quarter. What keeps you up at night?
What keeps me up at night? Nothing really. My kids. Recently, what China was doing with their credit markets was a bit of an unknown that came out of left field. It's contained. From what my understanding is, that they were trying to reduce the amount of credit growth in their economy, that they didn't have good control over it.
Great. Thanks for spending time with me today.